Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of December the 11th, 2017. Now this will be one of the last Forex Weekly Outlooks for the year. We'll probably do maybe one or two more at the very most as we're coming into the end of the calendar year, and liquidity in the market is actually going to dry right up to pretty much nothing. But we've still got a couple of key event risks. A major one coming this week, of course, is the FOMC, but talking about the most recent event risk, which is the non-farm payroll number out of the US on Friday, was actually a pretty solid number in my respectful opinion. You can see here that our U6 number from November of 2016, we were 9 million. We've dropped all the way down to 8 million. So the economy is definitely moving in the right direction under the current administration. Pretty hard to make any complaints here about what's going on. The economy really firing on all cylinders. GDP growth is up. But with the FOMC coming up on Wednesday, there is the problem here that the Fed has predominantly done whatever it can to throw water on any kind of dollar rally. So they are unlikely to get overly hawkish on Wednesday, which could cool off the dollar midweek. So when we look at things, one of our main drivers in the Forex market that I've talked about over the last several weeks is, of course, gold in this channel we've been running in. Now it's broken out of that channel. I discussed where the signal had come from in VantagePoint, the medium term crossing over the long term predicted difference, and then we've broken through this channel. Now my concern here is we are now moving towards an oversold condition. Now it doesn't mean it can't go lower, but again, in my respectful opinion, the Fed will do whatever they can to kill any kind of rally in the US dollar. So they'll throw a bone out there or a carrot, but then they'll pull it right back in. So the dollar is likely to hold its ground until then, but be very, very cautious trading around that. So when we look at the dollar a little more closely here right now, you can see we've got our 8-day starting to cross over our 18-day predicted moving average. We've got a crossover in the predicted MACD, but still below the zero line. Our RSI is still 62.3. We're above 50 and we're above 60. So we should see further momentum building on the dollar leading up to the FOMC. But what I've noticed over the many years that I've been doing this is often whatever the Fed is going to do, it's already been leaked. And if people are buying dollars heavily leading up to this announcement, it's probably because they know something, that the Fed is going to talk up more rate hikes potentially, but I'm not convinced that they're going to do that. So this will be left to be seen. But again, when we look at our main commodity, which against the dollar in our currency trading, because of the extremely high correlation gold has to the euro, the yen, and the inverse correlation to the US dollar. So gold is still a determining factor. We've got commodity prices holding with oil, but oil and the dollar, not much of a correlation there these days. Oil just kind of wandering around doing very little, but the equities, there is a major correlation to the dollar. The global indices keep moving higher. The dollar tends to continue to move higher with it. Now, with that being said, that with gold moving lower, that has put extensive downward pressure on the euro. Make no mistake, guys, the trigger with gold selling off and breaking that range that I discussed for the last several weeks led to this move down in the euro. But once again, how far the euro is going to go down is left to be seen. In my respectful opinion, the euro is having a great year compared to the US dollar. Don't let anybody try and tell you differently here, guys, because the charts simply don't lie. If we look at this particular chart over the last year, you can see that the euro has had one heck of a year, despite people saying the euro is weak, the euro is in a bear trend, yada yada yada. Nothing of those statements is actually factual looking at price action. Price action doesn't lie, guys. That's not me saying it, it's the market saying it. The market is buying euros, so they're going to be looking probably to come back here and buy further euros when they have the opportunity. And if that's going to come to fruition, guys, it's going to be probably after the FOMC announcement. Now, our key vantage point level that we want to watch here very closely, 117.98, bearish close of 117.70. but we're still hovering right around this 118 level support, and it has been one tough nut to crack on a consistent basis. So right now the euro is likely only correcting lower, but I will admit that under the current administration, the US is really doing quite well despite the media, the fake news, everything else that's going on out there. The economy's rolling around pretty good. Can we contribute all of that to Trump, or even some of that to Trump? I'm not here to debate that, guys. All I can tell you is the economy is doing quite well. So when we look at US Swiss franc, this particular currency pair, guys, will absolutely follow the dollar index. Dollar index up, US Swiss franc up. Gold down, US Swiss franc up. So not a big surprise that it's moving higher, but we need to get back up above the parity mark here, and we need to stay up there. To give everybody some idea, over the many years that I've been trading in the currency markets and advising clients and hedge funds, etc., I'm used to trading the US Swiss franc much higher, around 112, 115, 118. But the US Swiss franc pair is, the Swiss franc in general, it's showing the overall depreciation of the US dollar. We're not able to get up to these levels despite we're at 2650 on the S&P 500. Commodities are way down. None of that is really boosting this pair up to any real extent. So ultimately I feel that this pair will probably go lower after a move higher, but the key levels for next week to watch, we need to hold above 98.65. Most of our indicators are still bullish. You can see the predicted MACD, the RSI, so it still looks good, and it still looks bearish for the euro. But again, this pair, same as euro US, it's going to be determined, the next move, the next big move will be determined by the Fed. Now, as we look at pound dollar going into next week, what I've talked about over the last week's Forex Weekly Outlook is basically we put a top in here around 135.50, and I suggested last week that area is probably going to hold. We have even bigger resistance up at 136.50 that's hasn't been tested yet. Now, we've had a big move up and a big move down on Friday, and a lot of that's the non-farm payroll number. Very good number out of the U.S. again. I think the average monthly gain now is all the way up around 175,000 jobs a month, which is pretty decent, and the 4.1 unemployment plus a very strong U6 number. And again, the U6 number that I showed you guys at the beginning of the video, that is the one to watch. It gauges the overall labor market, and it's moving very much in the right direction. So when we look at pound dollar, our indicators are quite mixed here. We can see that I've drawn this line across here, medium term crossing over our long-term predicted difference to the downside. And again, I feel that the pound dollar is grossly undervalued, even at the 133 mark, guys. I'm used to trading this one upwards of the 190, 2.1, like much higher than this. So there is going to be some very good long opportunities, I feel, in 2018 on this pair. Once again, 100% support the Brexit. I know that a lot of liberal analysts, they didn't like the Brexit, yada yada. They should have done this ages ago, in my respectful opinion, and they had to get through the initial shock of doing it, but we're already starting to see the benefits of the Brexit for the UK. So I feel that in 2008 the pound dollar is going to be a fantastic long trade. So we still have to get through the rest of 2017. But the key levels, we've also got a heavy support level, the VantagePoint level, 133.54. We want to hold above this level as long as we possibly can. And we also have solid trend line support coming in at the 133 level. So if we lose 133, short term, we're probably coming down into the 132 area. We may see 130.50, but I don't think so. You can see how I'm staggering these support levels down. But right now, we're still at 51.1. Even after that non-farm payroll number, we're still holding above that key vantage point level. So starting next week, watch your 133.54 very closely. Now, as we come into the dollar yen, I've had numerous discussions over the last several months on this pair, and I've stated very clearly that this pair is simply range trading, guys, between essentially 111.50 and this 114 level. Now, this is a classic bear trap that I warned my own direct clients about right here, and I'll talk about another bear trap from last week on US CAD. You can see that basically they try and push it through this 111.20, 111.30 area. They get a dip down. They get the market basically buying some of these things. Now, what happens here is, again, we look at a breakdown below this particular area, and it signals the market to get short, start buying in. Basically, they immediately get stopped out here, and the market reverses. Now, VantagePoint, again, you can see how I've drawn the medium term crossing over the long term predicted difference, and that was back here. And that signal, when I connect the dots to that particular signal, that tells me that this downward trend is probably not what it appears to be. Now, again, when we look at these things, we want to make sure that we're understanding how all of this tends to work. Now, again, when they're a classic bear trap like this, we have to be very, very cautious of. And the reason we're being cautious of this is that this is where most traders get stopped out. So right now, we're moving towards what I would call also a bull trap. So people get very excited. They start going long up here. We've got potentially a little bit more in the long trade, but this area around 114.50 is a well-known resistance area. And again, in my respectful opinion, what I've said for the last several months is we are simply range trading. We buy the bottom and we sell the top, and we'd be very cautious right around this area where we are now, because basically we're right in the middle of this particular range. So we don't want to get, we got to be careful here, guys. 112.48, this is the area to watch for next week. I know I've spent a little bit longer on dollar yen this week, but it's because I want to make sure that everybody understands how to trade this particular pair and what to be careful of. Now, it is bullish. We probably will move towards 114, maybe 114.50, but only a sustained break. In my opinion, what I've advised my own clients is that we need to break free and clear of 115. Then we're free and clear to get into longs heavily. Until then, be very, very cautious anywhere above 113.50. Now, with the US CAD, this is again a classic bear trap that we all experienced this past week. And what I mean by a bear trap is that the market gets very, very confident that the US CAD is going to, it's breaking through the part of this range and it's going to go lower, where my own clients and I, we were buying off of this level very heavily. And the reason we were buying off of this is because oil was under pressure. So if oil is moving down, then US CAD has to move back up. That's the global intermarket correlation. And again, that's come to fruition. So the people that think that they have an easy trade down here, they turn around and get stopped out. You can see that after that, the neural index switched. It moved back to the upside. We've got a crossover in our predicted MACD. But now we're moving towards what potentially could be a bull trap, just like what I showed you guys on dollar yen. 129.15. We have to break free and clear of this area. We have to close above this area at least for 2 days in a row. If we can't, it's another trap here up here, guys. So at this time of year, be very careful. We do have a buy signal, a loose buy signal from VantagePoint, but that medium term crossing over the long term predicted difference right here is already warning me that this medium term trend to the upside is weakening. So we probably will see a failure above 129.15, but once again, totally dependent on what's going to, of what the Fed states in their announcement. Because remember, the FOMC announcement this Wednesday also has a projection meeting. So they're going to give their projections for 2018 and 19, where they think the market's going, where they think the economy is going, and they're going to talk about interest rate hikes. Is it transit? Some of the stuff we've experienced, is it transitory, not transitory? So we're really dependent. Commodities in general are very dependent on what the Fed is going to say on Wednesday. So with Aussie US and New Zealand US, they're sitting at the bottom end of a very known channel here. If they're going to continue to move, if Aussie US and New Zealand US are going to continue to move lower, gold has to keep moving lower also. Oil needs to keep moving lower. Commodities, iron ore, copper, they all need to move lower to push Aussie, US, and New Zealand lower. The key level I would watch here, 175.78. The key level on US CAD, we need to hold 127.73. That's what we need to do, but I'm already seeing signs of weakness in that uptrend. That means Aussie US could turn around. We need to break free and clear of 75.88. We can see the indicators here. They are moving into an oversold condition, same as New Zealand US. New Zealand's critical level, 68.64. We're closing 68.34. So if we can retake that 18-day predicted moving average, and if we're going to break above 69, we need a very dovish Fed. So we've got a very tricky week ahead of us in thin, illiquid markets at year end, and we've got the Federal Reserve on Wednesday, which is basically going to dictate the direction of the equity markets, commodity markets, and most of your major currencies for the remainder of 2017. So with that said, this is the Forex Weekly Outlook for the week of December the 11th, 2017.